This is Cover Your Assets, the podcast where the Insurance Advisory's important conversations happen. Each episode, we talk with leaders from across the insurance industry to tackle the protection, practice, succession, and estate planning solutions that matter most to insurance and wealth professionals today.
Welcome to the very first episode of a brand new show, Cover Your Assets. I'm Pierre Daillie from AdvisorAnalyst.com, and my co-host is someone you'll come to appreciate greatly who has spent his career inside the Canadian insurance industry. Ayal Cohen, president of High Point Life and Benefits Solutions, also licensed in property and casualty and general insurance, and an account executive at Nakora. Ayal, it is great to have you as a co-host. We've really been looking forward to launching this show in collaboration and cooperation with you. We've known each other for, 15 years now. In terms of our relationship with you, you also, I think, really proved over that time to be a great asset and a friend and a sounding board over that time. And so, we feel very comfortable in doing this show with you. We were always impressed with your knowledge and your depth. And so, Ayal, thank you so much for being here and co-hosting this show. And I'm really looking forward to our inaugural podcast.
I appreciate being here. I appreciate your sentiments, and I'm really excited to get this going.
In the show, together, Ayal and I are going to talk to the people who make the insurance industry work from every corner of the ecosystem. If insurance touches your business in any way, and if you advise Canadians and their businesses, this show is for you. Michael Wills spent years as a paramedic. His job was to show up after the worst had already happened. Today, his job is the opposite. He works with insurance and wealth advisors so that when life throws the curveball, the family on the other end of the phone is already protected. Here's the uncomfortable part. Most insurance and wealth advisors know the risk conversation matters, especially insurance advisors. Many of them still don't have it. Compliance feels heavier every year. Clients expect more than ever. And each type of insurance feels like a specialty you'd need a second career to master. So the conversation gets postponed and postponed until another advisor has it instead, and the assets follow. Our guest says you don't need to become the expert. You need to know where the expertise lives and how to bring it to your client's table without losing the relationship, the revenue, or your weekend. He is the Director of Business Development for Southwestern Ontario at PPI. Michael, welcome. It is terrific to have you on the show.
Thanks, Pierre. Yeah, I really appreciate it. That's a great introduction, and it definitely covers off just some of the importance of the things that we'll be talking about today.
Well, thank you again. I think Michael, it would be really great if we found out from you a little bit about the arc of your career. It's been really interesting. You went from the back of an ambulance to the world of insurance and advisor development. Most people would call that a hard left. You'd probably say it's the same job, right? Walk us through that and what does a paramedic see about families and risk that most advisors never will?
Yeah, it's interesting. A lot of people think that it is completely separate. But ultimately, I was just managing risk in a different way. I just didn't know it. So I was reactive. It was always a reactive job. We showed up at the worst time for any single family. And I saw a lot of critical illness, a lot of accidents, a lot of deaths. And it changes your perception on life. And when I decided to kind of roll over into this career, and I'll tell something kind of on the personal side, which actually will resonate with a lot of advisors and for clients as well, is I was going through a divorce. I was wondering if I really wanted to be a paramedic anymore. During that time, the kids were young. I have 2 girls, and my then wife had a critical illness while this was going on. And that really kind of hit hard, because when you're younger, you don't think anything's ever going to happen. And I was actually watching my own life be one of my patients' lives. So it was interesting, and it kind of changed the way I thought about life. And when somebody brought up the insurance industry, I was very interested. So I moved over. I was a insurance advisor with Freedom 55 for a couple of years. I then actually ran an AGA for a P&C firm and built that out nationally. And then I moved over to PPI into business development. And since then, basically, I've just been able to not only help my own clients, but I've been able to make sure that every advisor I know is helping all of their clients. So now I'm not helping hundreds of people. I'm helping thousands, tens of thousands, make sure that they're getting the insurance that they need to have in place.
Sure. So you come from the background where you really got there too late. And in the difference with the insurance industry as well as wealth management is we want to get there early. Insurance companies, lenders, banks really don't like to hand out umbrellas when it's raining. And so it is upon us to really get there early and help clients when there's a natural opportunity to help them. Tell us a little bit about what Director of Business Development at PPI actually does for advisors in helping them position themselves properly.
Yeah, so my role as business development at PPI is to help advisors across Ontario. And of course, we have teams across Canada that help advisors across Canada. And it really is, I'm a people connector. I remove roadblocks for advisors when they get stuck. And I really work on helping them identify planning opportunities within their practice. And I bring in the expertise to help them when they need it, or we just have conversations that make them more comfortable about having those conversations themselves. And ultimately, that's just my goal, is to have better client outcomes across the board. I'm never there to sell products. I'm really there just to help the advisors solve their problems and just connect them with the specialists so that they can run a holistic practice.
What would be sort of the cathartic equivalent of the financial version of the emergency call?
Great question. I can kind of roll back to being a paramedic and being on some of these calls. One of the wonderful things is you get to meet fantastic people. You get to meet some very special people, but you get to meet some fantastic, very interesting families as well. World War II veterans from both sides. So you get to have these great conversations. You get to ask great questions. So actually, one of the things that I learned as a paramedic was digging deep, asking real good, solid questions. And that was my job. I'd come in, I'd talk to the patient or client. I'd ask them a lot of questions. I'd dig deep, and then I'd figure out, I'd assess the risk, both the known risks, what the patient thinks, and also what I'm looking at just from the information I'm gathering, and then developing a plan to treat what I can right there. And then I'm also going to move them to the hospital to see the specialists.
In order to be able to act and do
Yes.
what you're there to do, you have to be able to look past it, past the trauma, look past the ailment, the condition, the heart attack, whatever it is that you're responding to be able to provide treatment on the spot, transitional treatment, right? I mean, you are saving a lot of lives on the way to, before and on the way to the hospital, like, resuscitating, if it's a drug overdose, applying Narcan or whatever. I mean, it's so many, I can't even, I just tried to imagine
everything that you can think of and more.
Yeah.
Yes. And, and the secret is you're removing yourself, but you're also maintaining this empathy. I think that kind of rolls over into the advisor as well. You're having these amazing conversations with amazing people, and you're in their lives. You're having discussions, and something can happen to them that you're now having discussions and trying to help them fix what's going on. If a patient has a critical illness, they're no longer able to work. Okay, now we need to rebalance this entire plan. And I think it's just really important, and that pulls back in. Let's make sure we have those discussions about protection, protecting your income, protecting your family, protecting those assets, to make sure that we put that wedge during that wealth accumulation phase. We're putting a wedge, constantly putting that wedge in that's going to stop that ball from rolling back down the hill. So at least we can start at a level of, where you're maintaining your income. You're not pulling money from your assets in order to survive. You have things in place to protect you, protect your assets, protect your income.
Actually, there is a real parallel. At time of claim, you care for these people. They're amazing people, your clients. You have great conversations with them. You feel friends with them. Some of them are actually friends. And when there's a claim, either a death or a disability, you've got to be empathetic and caring, because you are. But you've also got to operate and make sure that the claim gets handled properly and gets taken care of properly so that they don't fall between the cracks.
Yeah. There's a sense of responsibility that you take on as an advisor. If there is a critical illness, there is a death, you remove yourself, yet you also remain empathetic. You feel exactly how they feel. You feel for your client. You're going to make sure that you help them out. But there's that other side. You have to make sure that you're doing your job properly. You have to make sure those forms are filled out properly. There's that sense of urgency and that sense of care to make sure everything's done properly as best as you can, so the client gets that money or solution as soon as possible.
And Michael, does the paramedic instinct still show up in how you work with advisors?
Oh, I think so. Yeah, I pull a lot. I am a person that asks a lot of questions. I don't mind digging deep, and asking some of those harder questions. And that really helps, kind of talk when I'm talking with advisors. A lot of the time it's about either a case or it's, about their business itself and how they're planning to move forward with that business. How do they want to grow? How are they growing their revenue? What revenue streams are they currently using? And is there other opportunities that we can build into the practice to make it a better growth practice, where they actually want to see it in 2 years, 5 years, 10 years? How do we build that out? So those are the part of the conversations I have. And I think, ultimately it is just knowing and not being afraid to ask questions or have difficult conversations, that I bring into my job now, in order to make sure that I'm helping advisors, which therefore I'm helping clients.
Michael, let's set the table for the audience. You're in the field every week with advisors across the mass market, family and high net worth segments. What's changed in the last 3 to 5 years? Because, from where we sit, two things are squeezing advisors at once at the same time. Compliance keeps getting heavier and clients keep expecting more. Is that sort of what you're seeing on the ground?
From experience, I would concur. When I got started in the business, we barely had a KYC. Insurance didn't have a KYC. I think it was only short wealth advisors that had a KYC. We had no needs analysis at all. We barely did any comparisons, and now there's a growing regulatory requirement and more burden of paperwork and documentation for every single policy. So the difference is night and day. Michael, maybe take us through compliance first. What does growing complexity actually look like at the advisory desk?
Tech is fantastic.
Yeah.
We all love to use it. We love it and we hate it, right? And ultimately we used to have a desktop. That's where we worked, on the desk, and now we have screens. Those are our desktops. And the problem is the advisor's desk is becoming more and more crowded with compliance, with clients knowing more and planning just becoming more complex. It's good that compliance has really stepped up. I mean, even for us as an MGA, even in the last 2 to 3 years, we have tripled the amount of people we have on our compliance team. And that's in order to, and we're not here to be a regulatory body. We're here to make sure that the advisors are doing everything they can and they know everything to make it as easy as possible so that when and if they ever get audited, they know they have everything in place already, and then they don't have the support system in the background that'll help them out. But it is becoming definitely more complex. The expectations are higher and continue to get higher for all the advisors, both on the wealth side and on the insurance side. And we just make sure that everything is in place for them to run an efficient practice. And we give them the tools and concepts that help them make it a little bit easier for them. Like just the fact that you can now take notes digitally, what a world of difference it does make. But it also, you know, there's you can look at every single one of them in 2 ways. But I think it's a fantastic thing.
And then with client expectations, what you know, that we've got a growing client expectation as well. Where did that come from? Does that come from competing advisors, the banks? So what clients are seeing over the internet, or family office models trying to trickle down a little bit into smaller families?
Yeah, I think a lot of it is from the social media and the access to information. So anybody can type anything in to a search engine and get an answer now. And they don't even get an answer. They also get links to videos. They get links to podcasts. So I think advisors need to be aware that, I mean, and even yourself, Pierre, I went back and I looked and listened to some of the podcasts that you guys have had, and you've had some fantastic people on. And there are clients that are listening to these people.
Absolutely.
And I think you just need to be aware that that's happening. And you have to be ready to have those conversations with your clients when they come to you with questions.
Yeah, you need to be open to it. You need to be ready and open to it and wanting to know more about it. You know, send me that link. I'd like to watch that too. When Google became a verb, you know, people would show up in their doctor's offices with you know, WebMD and everything, you know, else that's out there, and start telling their doctor what they thought was wrong with them, or what, you know, what they wanted from the doctor. You know, they would just go straight to the solution. Like, I think I'm having this problem. You know, if you can, yeah, can you just prescribe, right? Can you just prescribe that particular, you know, pharmaceutical for me so I can get on with my day? And you know, and the doctor's looking at you and thinking, are you serious? You know, where did you get that?
That's right.
How do you know that's what's happening to you? It's kind of the same problem, but hopefully, like the you know, advisors are in no position to dismiss the evidence that their clients show up with.
Yeah.
Right. It's not something you definitely do not want to be dismissive about that, because if they feel that the authority of the source of information that they tapped into on the internet or on ChatGPT or whatever they're using is greater than your own authority, then, you know, you're actually taking a huge risk.
Yeah.
Yes. At the same time, as an advisor, you really got to calm people down a lot, right? There's a lot of people out there, you know, it should be wealth. They're talking about shorting the market and everything's going to collapse and God knows what else, and all these conspiracy theories out there, and insurance as well. There's all sorts of people out there that are selling or presenting misinformation or information that could be really, if ill-timed and not used well, could really be detrimental to the client. And so sometimes you do have to be that doctor that says, no, you don't, you know, that little mole on your face isn't cancer.
Yeah.
Right.
There was an academic study that was done recently this year, that was completed this year. One of the core elements of that academic research said that found that investors are more likely to react positively to advice if it lines up with the insights they've already gained on their own. So it's the cart before the horse, right? And so if your client shows up asking about something they already feel convinced about, and you're dismissive of that, without finding out where the source, where this information came from or how they got to that conclusion, cuts both ways, right? Like the danger as an advisor is that if you dismiss the client's conviction about something, you're dismissing the client.
Yeah, you need to be ahead of the game. You need to know what they're looking at. I myself, I'm on YouTube and searching things. What are clients seeing these days? And they can go down a rabbit hole. And some of them are great. Absolutely fantastic. There is fantastic content out there for clients to learn and advisors to learn. And there's some bad stuff as well. And I think you just need to be able to be inquisitive and open to the conversations with these clients so that they feel safe having the conversation with you. Because if they don't have that safety having the conversation with you, they're going to find somebody else to have the conversation with.
And it's going to start by them going underground.
100%. And I think they're not just getting in, this kind of, we're talking about a lot of this is what you see is about wealth and investing, but there's an insurance component to this as well. Mm-hmm. They're getting more and more information about, they're hearing things, infinite banking or, what is, more and more clients are coming into advisors' offices and saying, hey, I heard about this product. I heard about this solution. What is critical illness insurance? I have disability at work. Should I have my own personal disability insurance? People are coming in. They know to now ask these questions, and just to be prepared. One of the big things that I work with advisors on is just being prepared to have those conversations, even at a general level, and not to be afraid to have them. So what we find is a lot of wealth advisors. There's fantastic wealth advisors out there. They're doing a fantastic job at advising, but they're often afraid to have that one conversation. They don't ever want to not have the answer to something a client's going to ask them. They have a lot of A-type personalities in this industry, and we always want to know the answer. And it's okay not to. What we want to know is the people that we can call if we don't have the right answers, and we have the answer for the client, and to know that we have support in the background with a team of people that can help. And I find it funny, not funny, but a wealth advisor will instantly know and say, I think you need to talk to your accountant about this, or we're going to bring in your lawyer in order to handle this. Not all of them are comfortable saying, I'm going to bring in an insurance consultant, an insurance professional to handle this issue right here. And that's part of it is learning that that's a great response to give a client. Hey, this isn't what I do, but I have a team behind me that does know what they're doing. And this is an issue we want to look at for you and your family.
Advisors are worried at times that bringing in a third-party expert could upset the apple cart for them, right? So they're not necessarily thinking about it in the sense that, I'm going to bring in this insurance pro to talk to my client about this solution that I'm not an expert on, or I don't really have a great working knowledge on. They're worried they're going to lose control ultimately. The question I really wanted to press you on is, why do advisors miss these opportunities? And I think we've covered some of the reasons, but I don't believe it's ignorance. Every advisor, knows their client has a mortgage, a business, kids, an estate. The needs are sitting right there in the file, right in front of them. So what other, maybe we can dig in a little bit more into what we started talking about, and it's actually stopping. What do you find are the real reasons the conversation is not happening?
And is it growing complexity, or let's be blunt, missing the opportunity is a cost, but it may not just be lost commission or lost fees. If somebody else is approaching your client, your accountant is having insurance conversation with them and referring them to somebody, that could diminish how you're perceived by the client themselves, and the client's thinking, well, who's actually doing the deep thinking in this relationship? At the same time, I can say, being on the insurance side, there's a lot of overwhelm with existing products, existing solutions. On my desk right now, I've got a case of a couple of families, relatively simple. Disability insurance for truckers, buy-sell insurance, key man insurance for a tech company, and I can easily live without doing any wealth management and not thinking about that. So I suspect that that's the opposite as well, converse for wealth managers. But we have a duty to really care for them holistically, I believe.
How much time do you have? How much room on your plate do you have to do everything? So when we talk about it, it's absolutely fantastic. We always say, hey, take a holistic view for every single one of your clients. But if you're busy, you're making good money, you are in your sole, 95, 99% of your practice is on the wealth side of things, and financial advice, planning. How do you roll everything in? And, I don't know about YouTube, but I have this constant growing list of things that are really good ideas or things that need to be done, and other things keep showing up. So the thing that was number one and I needed to do it last week is now down to number 15 or 20. It doesn't mean I don't want to do it. It's just finding the time to do it. So I think a lot of advisors are having trouble with the increased complexity, with the increase in paperwork, compliance, the conversations that are going deeper with their clients. How do they find the time to do this? And we've actually, and a lot of MGAs, including PPI, have found a way to do this, is we use insurance consultants. So we offer wealth advisors to work with our insurance consultants in the industry, and it's not just PPI. I'm gonna say across the board, MGAs have this available to them, and we have legal agreements with these consultants to never disrupt your business, to never steal a client, which is one of the major concerns that a wealth advisor has, is losing a client to, if they just bring in somebody to write some insurance. We have agreements in place, and we have a team of consultants that'll come in and help you write business. And that can be at all levels. We have wealth advisors that do not want to do any insurance, and they refer absolutely everything. Hey, you know what? You have an insurance issue. I'm going to introduce you to. Or we have advisors that say, we have an issue here. This is an issue that an insurance solution might solve. I'm going to bring in the consultants, and we're all going to have a conversation about this. And they work with everybody, from needing full support to minimal support. And I think that's a really good way for wealth advisors to make sure that their book is protected. Because ultimately, we want to make sure that there's a fence wrapped around each and every one of those clients. And I have stories of advisors that have called and said, hey, I need you to help me make sure my client doesn't do this. And it's like, well, what is it? Send it over to me. And we look, and it's a fantastic solution to an estate planning issue that they didn't have.
Right.
Somebody else had that conversation. So
Yeah.
ultimately, we want to make sure that clients are protected, And we want to make sure that advisors know you don't need to know everything. Ultimately, that is the grand scope of things. You do not need to know everything. You just need to recognize when there's an issue or an opportunity for planning, and that planning might involve insurance.
And you really need to then, so that means you're really just becoming a quarterback and bringing in the appropriate experts rather than trying to do everything by yourself as an advisor.
That's right.
How is it any different than bringing in accountants or lawyers or estate professionals for any kind of other professional advice that's available? It's that because wealth advisors see that there's some overlaps between the wealth side of the business and the insurance side of the business, that the insurance side of the business offers many similar solutions to wealth management issues, wealth management, wealth portfolio management questions and issues, because, they're in the seg fund business. They're often managing pension assets, group, all kinds of assets are being managed by insurance companies. They're some of the biggest asset management firms in the world are our insurance companies. And so that's where I think that's where the lines are blurred. Like, if, the estate lawyer is not going to steal my client. The accountant isn't going to steal my client. The bottom line is that if you bring in a third party and your client likes them more than you, there's always that risk.
If you are working with an insurance advisor, make sure that they're trusted. Make sure they're either accredited or linked to some kind of insurance consultancy program, that there's legal agreements in place. Make sure you sign things to protect yourself, protect your business. But ultimately, you can turn into something that absolutely thrives. And I've had advisors that were very resistant to the idea of bringing somebody into their practice, but they also couldn't do it themselves.
Right.
Yeah.
So do you want, right? So what do you want to do here? And that's kind of the conversation that I'd have with these advisors. And just, I'm thinking of one in particular, very, very resistant, did not want to do it. And he did it. It is 2 years, 3 years in, they have the best, the insurance consultants and this advisor have the best relationship ever. They're friends. They build out plans for all of his clients. It wasn't a one-time thing. Once he sold that one solution, which protected his client, he said, you know what? I have like 10 or 15 more of these clients. And so they started having meetings together. And now he's properly planning and setting things in place for each and every one of his clients. And that's really, really what's important. Yeah. But he is fantastic at what he does. And he knows when to bring in other professionals.
And so it seems to me, what I'm taking away from a lot of what you're saying and going back to what you were talking about in your paramedic days as well as now, it seems if you want to be really good at something, you can be really good at wealth management, or you can be really good at a particular segment. But really, you should be really good at asking a lot of great questions. Being on the sometimes uncomfortable side of a conversation with you, Michael, where you ask me a lot of complex questions about client cases and as well about my business. Do MGAs have the resources there to kind of help with the questions, with the discovery of the client case?
Yeah, absolutely. We built out questions. We have tools to gather information. Just the same, you're gathering the same information you always were. You're just asking a couple extra questions. And just to know, right? So let's say we have a business owner. You're already asking them some questions. Well, we have question sheets to provide an advisor and say, here's, 10, 5, 10, 15, 20 other questions that you might not know to ask. But ultimately, if you ask these questions, your client's going to appreciate answering them, right? Because it shows that you care. It shows that you're knowledgeable enough to ask the questions. And you say, listen, I'm going to take all this information back. I'm going to talk to to my team, and we're gonna come up with a solution for you. It is really asking those questions. And Ayal, exactly right. Like, how many times have I gone to you and said, "Hey, I need some more information on this case"?
Too many times.
Yeah, sorry, but I'm not sorry.
Oh.
Yeah,
Every time.
You know, asking the right questions implies so much. It implicitly demonstrates knowledge or awareness. And I think that is what clients ultimately respond to. It's not that you said the right thing, it's that you asked the right thing.
And if you're asking the right questions, open-ended questions, so we know what to do, ultimately the client often comes to the solution that you want them to come to. They're the ones that tell you what they need. And when you're having those questions, when you're having those conversations, when you're planning, even like when I talk to some of the insurance professionals, a client won't hear the word insurance until the very last meeting, because it's all planning. It's all solutions, either to work out a family estate. We're talking about corporate estates, high net worth. Those conversations, the actual plan at the end, it's no different than a wealth advisor saying, having all these conversations and saying, we're going to put you into this, and this. These are the funds we're going to use. These are the stocks we're going to use. And it's because of everything you've told me. We've already built a profile for you. I think that's kind of the same approach. You're not talking about insurance, you're talking about planning. You're talking about finding out what a client actually needs, and then building a plan around that. And part of that plan can be insurance, if it makes sense.
And I think that's where, this is so powerful. This is such a powerful idea that, as I've gotten sort of reintroduced and refamiliarized with insurance over the last 5-10 years, I started to wonder, why aren't more wealth management advisors looking at this as opposed to just simply the legal and accounting means of reducing taxes? Why are not more wealth management advisors, or even people who are in the insurance field but have not delved into those lines of business that provide those kinds of high net worth, large case solutions for business owners? Like, if I'm getting into this, if I decided to get back into the advisory business, I would have all the bases covered. I would have the wealth management bases covered, and I would have obviously the tax and accountant bases covered. But more importantly, I would have the insurance base covered, not because it's insurance, but because I've come to realize or view insurance as an asset. I think that's where the nuance is for wealth managers, as wanting to be the holistic advisors for every stage of wealth. But and that, which will bring us to the next question, because we talked about it in our pre-chat. But once you realize like the kinds of problems that you can help your most affluent clients solve, multi-generational wealth in the truest sense of that terminology, being able to bring in a third-party expert who will explain everything down to the crossing the T's and dotting the I's, is so valuable, not only at the beginning of the relationship, but anywhere after, where, you're coming in now, you've been dealing with your clients for 10 years, 15 years, and there's this gaping hole in their plan that they haven't even considered yet because they were so busy building wealth, accumulating wealth. Now they're faced with the challenge of transition. What's going to happen to all this success that I worked so hard for? in the family business or my company or whatever it is, what happens to my family when I'm gone? What happens to that when I'm gone? And, if somebody's worth $20 million and only 11 million of it is going to end up with their family, that's a serious, serious problem to solve. That those clients will be hands down eternally grateful, and literally eternally grateful to you for what you did for their family, for them and their families, the problems that you solved. And that's why I find it bewildering that when you're like, if you're an advisor prospecting for the ideal, whatever your ideal client is, why aren't you leading with these ideas?
Right.
You approach a business owner, an entrepreneur, a successful entrepreneur with these ideas, they are going to be all ears about how to preserve what they've worked so hard, what they've sacrificed so much time and energy for their family's well-being, that, only to discover that if I don't do this, CRA is going to take half of it from us.
That's right. Yeah. And I think a lot of people just assume that somebody else is having the conversation. The wealth advisor is assuming the CPA, the accountant's having a conversation, or the lawyer's having the conversation. The lawyer and the accountant are thinking that the wealth advisor's having a conversation. And yeah, there's this gaping hole in everybody's plan. And if you start early enough, and ultimately, what I would say is, if you're a wealth advisor and this is something that interests you, don't beat yourself up now. You can start tomorrow by just asking some more questions, and by looking at another revenue stream for your business and learning how to do it, and taking the time, and or finding somebody else to work with to do it for your clients. And it also leads to opportunities. And, we went back and we talked about, like, why aren't advisors doing this? And a lot of advisors, they're planning, they're doing the wealth, and it takes time to learn something new. So it takes time to learn something new. And I know that you need a term product. We're just going to start. And listen, I know you need 2 million of term. Well, is it worth my time? I'm not going to beat anybody up on it. It's a question. We know it gets asked. Or you're hoping somebody else does it, or maybe they already have it in place. But ask. Get it in place, because when you get that in place, when you build up a book of term, when you build a term block of business earlier on in your career, and it's never too late to start, this leads to opportunities for you as an advisor to have conversations later about estate planning. Because one of the biggest problems when we start talking about estate planning, and insurance is sometimes the solution, is health.
Unexpected health issues, yeah.
Unexpected health issues, and or right now they want to talk about their estate plan because they had a heart attack last year. Yeah. There isn't enough term insurance in place, or nothing. There isn't enough insurance period in place. But if you have a term in place, you have to remember that it's convertible. There's no medical requirements on a conversion. And you can solve the problem for the family.
That's astonishing. You read my mind. Michael, because that's what I was going to ask you about, is exactly what you're talking about. We discussed it yesterday, and I was actually blown away by it, because I thought, it doesn't matter what stage of wealth your clients are at. If you haven't started having, the added conversation about insurance, it's time you did, because you're laying the groundwork for what you just said.
Yeah. They get used to that conversation. They know there's another portfolio. There's not just a portfolio of investments and wealth. There is an insurance portfolio. That is part of their ultimate plan. There should be 2 folders.
And they both fall into, we often, I think the problem is that we view insurance, because we pay for auto and home and things like that, and term even, as a liability.
Right.
It's something that we're paying for. It's not something that we're paying into. Like the problem is that it's perceived, insurance is, I think, wrongfully perceived as a liability. So treat it as an asset, because it will turn into an asset.
I think, the key wording there is strategy. Whereas if you're looking at auto insurance and home insurance, and sure, a lot of people may see that as just a net expense where they pay premiums and hopefully they never have a claim, they never have an accident, they never have a fire at home. When you're talking about the life insurance stability, you're really looking at a risk mitigation strategy. You have a high net worth individual or somebody who's quite a high earner and has, accumulated lots of liquid assets, that could all dissipate very, very quickly if they have a disability and lose their income. And the same with estate erosion on death and buy-sell agreements and giving substance to buy-sell agreements. It rather than look at it like a liability and a net expense, wealth advisors really do need to look at it as a strategy, and just another strategy within their arsenal of risk mitigation and tax efficiency and estate preservation. Those are all really important, because if you're looking after a person's wealth today, 10 years down the road, or if they come to pass or they come to be disabled, you've really got to look into that and differentiate between the liability and the cost versus strategy.
Yep.
It's kind of like from an investment side, from an investment point of view, it's like a put option. It's like shorting your portfolio, using put options to protect you from downside.
Right.
But it's an asset all the same. I'm trying to think of, elegant solutions and that's kind of what's blown me away, in sort of my learning curve about some of the more strategic things we've touched on. But I think if you are focused on the wealth management side, then insurance should be like you said, Michael. It should be in an asset folder, not a liabilities folder. I think that's the problem, is that at a very simple level, we just feel like we pay for insurance and we hope, to your point, Ayal, that we never have a claim, because that means accident, illness, or death. Right? But the actual long-term view is that death is inevitable, and so are the taxes.
Yep. And we have, in every MGA would have, forms that, or something to fill out that really shows those tax implications. Right now, if you're using planning software, that's easy. If you're not using planning software, then there's other ways to gather that information. And we have really simple, I'm just thinking back, I have one advisor, he uses a simple one-pager for every single one of his clients that says, here, wow, this right here, this is going to be your problem in 10 years or 20 years. Did you know that? Did you know that your kids are only going to get half? Like, all your money is stuck in an RRSP or RIF or LIF, whatever. Do you realize what's going to happen if you guys die? You're never using this money. We're never going to pull all of this money out. What do you want to do? And most clients don't really fully understand or appreciate that. I think that comes into play where things change for a client. There's clients that need insurance, young families, right? People that are growing, still in that accumulation phase. You need your life insurance. Usually term makes the most sense. You critical illness insurance. What are you going to do if you or your spouse get sick? And or disability insurance. What's going to happen if you can no longer go to work? What happens if there's every 2 weeks, you go downstairs and you press a button on your printer and it prints out $2,000, $5,000, $10,000 a month, whatever, right? What if you can't go down those stairs anymore? How about we make sure that that printer is automated? Well, that's disability insurance. Critical illness insurance. Let's make sure, and this protects the advisor as well. I know a lot of people that have critical illnesses, and you end up having to pull money from your TFSA and your RSP in order to fund and pay for things while you and or your spouse. If your spouse is sick, you're going with her to go see a specialist. Maybe you have to fly to another province. Maybe you have to go down to the States to go see a specialist, and suddenly your savings are wiped out. Well, what if we can protect that? What if we can use somebody else's money? And yes, this is definitely, it goes in line with car insurance or home insurance. You are protecting in case of, and those are the people that need it. There's also the people that learn that they want insurance. And that's where we start talking about estate planning and family legacies. And do they necessarily need it? No. Unnecessarily.
Yeah.
There's other ways to grow your assets and continue to grow your assets. But what if we took a bit of this and put it into a solution that protects some of this money against the CRA, against taxes, and we make it the best possible solution to pass money down to the next generation?
So, Michael, rather than, just making it, that makes it really concrete. So rather than talk here, thinking about, the mass market, family segment, high net worth, corporate owned, buy, sell, corporate key man, all those opportunities or potential segments where advisors can talk about, and where they really, advisors may walk past all these opportunities altogether. What you're saying is there's the people that need insurance, right? And typically they may be the people that can least afford it. And the people that want insurance because it's a strategy, right? They may be very, very liquid and have tens of millions of dollars or even, just $2-3 million, but want to protect that on death. Is that right? Those are
exactly.
kind of two umbrellas that need and want.
Yeah. And in each one, right, you can break it down into different, right? There's the high net worth, there's the corporates, there's your basic families, age. You can break it down by age. You can break it down. There's by incomes, all those things. But ultimately, that's kind of how I think about it. There's people that need insurance, and often those are the people that are worried about the affordability of insurance.
Right.
And then there's the people that realize when you're having actual planning conversations, they realize they actually want some insurance. And whether it's just to use other people's money so that they don't have to use their own, or to actually put estate planning and tax efficiency in place.
Walk us through an example, like a real life example that you've heard about or experienced yourself, and what that would have meant for the client if someone had actually caught it.
I can give you one from a needs base without any question. I've had a couple of clients myself who have claimed, and I can give you an example. The story I told of my own story. Man, I sure wish we had some critical illness in place. We were okay. We both had good jobs. Right? Everything was fine, but man, to have that extra 75 or 100K, you don't realize just how your ego is tied to your income. And if you are not able to produce income, and suddenly your spouse is not producing income either, and you're drawing on these savings on your assets, there's a lot of stress involved. And that can actually cause some other health concerns. So that's just my own story. And then I also have a client, young, and I really pressed her to get critical illness insurance. She was in her early 20s, right? Everybody's invincible at that time.
Right.
And I said, let's just get it in place, right? You're in a good career. You're making some good money. This is, and I always kind of show a circle of like, doesn't make sense to use 1 or 2% of your income to protect the other 98%. Nobody will ever say no to that. And that's what we did. And 6 years after, I don't even know if maybe she was 30. She got cancer. The year she was getting married.
Oh, wow.
So she was expected to get married. She's moving forward in her career. And you go to the doctor one day and you get told just the worst news ever, especially as a young person, right? Like when you're in your 50s, you go to the doctor and it's a shock, but it's not the same kind of shock than if you're, in your late 20s, early 30s.
Right.
And that was devastating. And man, did it ever feel good to give that check. It felt so good as an advisor to know, to hand that over and so thankful that she had that money. So, is that kind of the example?
I think every advisor out there will have that type of case where it's like,
yep.
I'm so glad I pressed this client. I'm literally having to deal with a disability case right now where I delivered the policy this probably 5-6 years ago. Client said, oh, this is really expensive compared to life insurance. And I said, yes. And I hope you never, ever use it. And I hope when, at age 65, you'll call me and say that was a big waste of money. But lo and behold, we're going through a disability claim right now. And thank God she had it because it would have been devastating not to have that coverage.
That happens every single day. And I'll kind of revert back to when I was paramedic. And like, I tell anybody, go stand outside the closest cancer clinic any day. And you will watch thousands of people go in and out of that every day. And that's just one of the critical illnesses that's covered. Never mind the heart attacks or MS. I had another client that called me after, like, hey, I know we had this conversation. I said, oh, did you go to the doctor? Yeah. Well, what happened? Well, I found out I have MS. Well, now it's too late.
Mm-hmm.
Right? Too late to get the insurance because she also let her term 10 run out. She decided not to renew it because the money was tight. And she decided not to get critical illness because money was tight. And within a year, she went to the doctor because something felt off. Uninsurable, MS. And that's just life, right? That happens every single day. And I believe that we have the opportunity as an industry to protect everybody from those curveballs. There's things you can put in place to protect yourself. Is it going to make it better? No, it doesn't solve the critical illness. It doesn't solve the death, but it makes things a little bit easier because financially, the financial stress that happens when you are disabled or you have a critical illness is beyond what you can imagine unless you're actually going through it. And the nice thing is, when you die and you don't have to watch your family suffer. But if you're going through a critical illness or you have a disability and you are the breadwinner in that family and everybody depends on you, the amount of stress, that's how you feel for now being the liability in the family and having to watch your family suffer through that. Nobody wants that. Like if I can express, like nobody wants that. Put things in place, make sure as an advisor, put things in place so your clients never have to feel that. So at least there's a buffer to protect them for a year or two. Cover the mortgage. Just do something, right? Make sure that they're covered in some way. That's just my advice, personally and professionally.
And for the advisor, the opportunity to do that is everywhere around them. It's hiding in plain sight.
Yeah. And like Michael said, Pierre, one thing that you were impressed with is, Michael said, start with term. It's very simple. It's easy to sell. You don't need to know a lot. But like, and you said it's like put options. It's literally is call options, because term insurance allows you to buy other insurance later on down the road without the need for medicals. So if you become diabetic, if you've had a heart attack, whatever it is, it's literally the option to buy whole life or universal life or other term insurance later on. It's literally a call option. And
I like that, Ayal. I really like that. I like that you described it as both. That something can be both a put option for your life and a call option
to me,
for your future planning.
Yeah. But it is a very, very powerful tool. And if a wealth advisor is uncomfortable getting into other, more complex products, fine. Start with term. It's very, very simple. You're in your comfort zone. You'll at least have that base level of protection for your client. And it's convertible anytime it's not anytime, there are limitations, but convertible to other more complex types of insurance like whole life and universal life and other term.
I really would love to get into more examples with you, Michael.
I was going to say, I do have one for high net worth as well, as an example.
Go for it. I'd love to hear that.
Yeah, it's actually just kind of built around a concept based on a lot of people going through this right now. Obviously, a lot of there's additional wealth, and what have a lot of people been doing with that additional wealth but buying real estate, and they want to leave that to their families, right? So so you can imagine somebody has 8 houses, right? Various stages of how long they've owned them for. So there's going to be various stages of the tax implications when selling. So we have a conversation about, well, what's your plan? What do you want to have happen for your family and for these houses ultimately? Some people don't even know. They just bought them. Knowing that they'd be an asset and they'd grow and everything like that. And they've never really even thought about the tax implications or when they're the one that is controlling absolutely everything about what's going on with these houses and why they were all purchased. What happens when they die? Who's going to take over this? Who even knows how to take over it? Do you want to, what if the market is down? First of all, you die and the market's down, that this isn't what you expected. And the tax implications are enough that you either need to sell the best house you have or the 2 worst houses you have. Well, what if we just bought it? What if we bought another house? Pierre, what if we bought another house and we called it insurance? And that actually covered off the tax implications for all those houses that are under your name. So your family doesn't need to sell any of them. Is that something that you'd be interested in talking about or taking a look at?
That's eloquent.
So it just gives you options.
And I'm sure that the person who bought the extra houses with their extra, with their incremental wealth was thinking, I'm buying these houses for insurance. Paradoxically.
I want to pass money down to my family.
Yeah.
This is a way I can do it. I know another product that does that. Tax-free.
Yeah.
Also grows.
There's also something that's come up in conversations I've had with some other insurance folks about seg funds in particular, and creating things like estate wedges and cash wedges. And that conversation was about the probate process and the fees and the taxes and the time that it takes to settle an estate. And if you don't have an insurance component like a seg fund or a policy or whole life or any of these other types of estate tilted life insurance solutions, your family could be waiting for a year to unlock assets. And while they're waiting, there's the loss of income potential. There's the potential loss of cash flow to the household. There's tax bills that are due on dispositions by CRA. There's all this stuff happening all simultaneously that leads to unplanned liquidations, which you've touched on. But for example, if you just put a percentage of your assets just as a starter into seg funds instead of all exchange listed products or regular ETFs or funds, but you moved a portion of your assets to seg funds, your beneficiaries would have that in what, 5 to 10 days?
Yeah.
The proceeds of that coverage
usually
would be
within 2 to 3 weeks for sure.
Yeah, not
a year,
6 months, a year.
It's locked up corporately.
Oh man!
If somebody puts a claim against your estate and everything is frozen until everything's figured out, seg funds solve that problem.
Years.
Seg funds solves a lot of problems.
Yeah.
Are they necessary when you're younger? No, not normally. As a business owner, there's some advantages to using some of that. And especially as you get older, there's some advantages. And, and that's just one of the other things when wealth advisors start looking and their advisor base or their client base starts aging, it's something that they can look into. And we have a team of specialists that also work in that department to help them kind of and guide them through why, what, how, which clients are best suited for this product.
Again, like to me, I see these solutions as elegant, really elegant solutions for bypassing the taxman, bypassing the courts, bypassing
It's private.
the legal woes. It's private. It's the beneficiary is the only party who knows that they're the recipient of the payouts. So if you had troubled children and you wanted to divide assets among them, there's so many angles. There's so many beautiful angles. The spouse, your spouse, your kids, the division of assets is clean. And I think there's so many avenues that any financial, whether you're a wealth advisor, insurance advisor, there's so many avenues that you can explore that are so incredibly opportunistic for the client and solve just the most astonishing problems you don't think about. Like what is going to happen? Like, what happens when you die and your family ends up in distress?
Or having a forced liquidation of assets?
Potentially everything, because the tax bill is so, the liability is so enormous that maybe it's overwhelming and destroys everything.
And we really are lucky. We're very, very fortunate as Canadians to have such a robust system. I've spoken to other people in other jurisdictions, other countries, and they don't have such a thing as corporate-owned life insurance. They don't have such a thing as whole life or universal life. All they have is a form of term insurance. They really don't have strategies for estate preservation through life insurance. It's all just basically like term insurance, protect the mortgage. That's it. So to use your word, Pierre, it's really very elegant, and we're very, very fortunate in Canada to have those solutions, the elegant solutions available to us.
We are.
Yeah,
I think the problem is raising awareness about the fact that these solutions are available, and they're available in so many different flavors and colors and stripes and everything under the sun. And that's just by virtue of the fact that the insurance industry is competitive, and every insurance company comes out with from time to time with new flavors and new options and new riders and new things that you can add into an insurance program of any sort that can make it very highly customizable. Michael, let's make this actionable. And then, I think we're coming up to 90 minutes here.
Yeah.
An advisor hears this episode and thinks, okay, I'm leaving planning value and probably revenue on the table. What's the Monday morning move? How do they audit their book for the opportunities or the aspects we just talked about? What does the first 90 days of working the team-based approach way look like?
Great question. I would say tomorrow, how well do you really know your top 25 clients? How robust of a KYC do you have on those clients? Do you know everything about them? And is there opportunities, right? You're looking for those flags of like triggering events, who's coming up to retirement, whose parents have passed away. Is there an inheritance coming down? Have you talked about these top 25 clients about succession planning? Are they business owners? Have you talked about how they're going to pass down and or unwind their business? Each of these conversations is going to create more conversations, which is then going to create proper planning. Large unrealized tax liabilities, and just set a plan and a goal to take your top 20, 25, 30, however many clients, and build out a plan. I'm going to call these 5 people and bring them back in for a more intensive review. Congratulate them. Listen, you've done really, really well. We know this. We're now going to take your planning to the next level and kind of build out a plan on how you're going to ask those questions. And don't be afraid to bring in the experts or bring in somebody that can help you have those conversations. That would be my advice, to break it out. I'm going to call these 5 people. I'm going to call these 5 people. I'm going to set plans to bring in my top clients and have larger, more in-depth discussions. I think that would be a great way to do it. On the flip side, if you're a family market person, do you have the insurance for all of your clients? That's a great place to start too. So if you're talking about high net worth and everything like that, or you're aging, your client base is aging, then number 1. And number 2, if you're starting out, if you have a lot of young clients or if young families, or they're still in that accumulation phase, then I'm setting a plan to start having these conversations, taking a more holistic view. And even if they have insurance, you can bring it in and say, hey, listen, I'm going to take care of this for you. If you have any questions, and I'll take care of this. And you get to take a look at it and you get to say, hey, listen, like, you have some critical illness in place. There's a return of premium on it. This is a fantastic product. We're going to keep this. But the term, based on what we've talked about today and your needs, I think we could probably rewrite this one. You're still healthy. Let's put a new term in place. You leave what's good, you replace what's needed, and now everything that you're trusted, the client trusts you more, and you're opening up opportunities down the road to have larger conversations. That would kind of be what I would build out.
I love it. There was something I wanted to say to you to bring up before in a previous part of our conversation where we were talking about asking the right questions. If you're afraid as an advisor to say or to imply that you don't have all the answers, that's not important to your client. If anything, the implication that you don't necessarily have the answers to all their questions on the spot is honest. That you're not trying to be all things at that moment when you can't be, or you're afraid to delve into the subject because you don't have the working knowledge yet. And the real power is in the asking of the questions, broaching those questions, asking sometimes difficult questions, but that lead to very productive conversations for both you and the client, but especially for the client, because it may also be questions about things they've never thought about, never considered, never even looked at, never even thought existed. They didn't know. And you're opening a door to a vast new world and process and ideas that they've never thought about, that they've never considered. No one's ever said to them, these are some of the gaping holes that you're not aware of. And I think that's very powerful. Thank you for sharing that. I think that's really...
Or they have thought about it and they don't know who to talk to about it. They stay up at night wondering about these things and they have no idea who they should be talking to about these worries that they have.
And business to business, Michael, like, you know, when we were getting ready to do this first episode of this podcast, Ayal spoke effusively about you. That, you know, you're literally one of the best people he's ever worked with. He's known in this business. You've been one of the most resourceful people, helpful people, hands-on. For the advisor who's looking for a team, to build a team of insurance experts, can they turn to you? Are you somebody that they can call up and contact and say, hey, Michael, I really need help with these areas. I don't know anybody in this business, or I don't know anybody that I can count on. Can you help me?
Absolutely. Yeah. And I know, I'm always happy to talk to anybody. Probably the best way to get in touch with me is through LinkedIn. Michael Wills, look for this guy, this space. And even though I'm with one MGA, and doesn't mean that I'm not willing to have a conversation and see what you need, or if you have questions, I'm always happy to have a discussion with a great advisor that's looking to build their business. And if it's not in Ontario, or if it's across Canada, I can start that conversation. But we have teams, we have a whole bunch of other me's across Canada that can also have that great conversation in the province that they're from.
So at the very least, you could start to help the advisor open those doors and start exploring at the very minimum, and at the maximum, you could help them possibly assemble a team, put together the various experts, or tell them what to look for in the various experts, who to turn to. I know somebody at another company. I know somebody at this company.
100%, Pierre. Yeah. I'm always help anybody. I spend a lot of my life just helping people, and that's ultimately what I enjoy doing.
Well, to me, that's the power of valuable networking. It's not just going on Google and saying who's the best guy for this particular field, and then finding the ChatGPT results or the Google AI results for that. For an advisor who is interested in what we've talked about and looking to expand their breadth, looking for help from people who have broad relationships across the industry, that they could actually call you, irrespective, regardless of your direct affiliations. I think that's valuable. Thank you.
Yeah, you bet. And I probably started the very first conversation I had with Ayal was to say, this is what I do. This is what I can do for you. I do not know everything, but what I do have the ability to do is I spend time searching out the people that will be able to help you with the questions that you have. So if I can't answer it myself, I will find somebody that can help you. And I think that's all you want, right?
That's a really great attitude of humility that I think, personally for me and potentially for other advisors, but many advisors out there, you really want to know everything, be everything for that client. And you're concerned, well, if I don't have the answer right here, right now, maybe that diminishes the client's perception of me. Where, if you go out and search for the right solutions and connect with the right people, you'll probably bring a lot more value to that client than just trying to be everything for that client. And having conversations with Michael really are confidential conversations that you can have about clients and bringing the resources. And none of the advisors' qualities need be diminished in any way, if that's the potential fear.
Yeah. I mean, Pierre, I mean, Ayal knows, because I've said it many times, but Pierre, how many times a day I say, that's a great question. Well, I'll get back to you, right? And I do. I'll find the person that has the right answer. Because ultimately, nobody knows everything. That's okay. Do what you do best. And find a team that will work with you to support you in all ways so you can build the best practice possible.
You're not trying to be all things to all people, but what you are being is the go-to person. Be the valuable intermediary who can vouch for the people who have the knowledge.
Yeah. And it's no different, right? As an advisor, you should know a couple lawyers. You should know a couple of accountants. You should have, if a client asks you a question that you don't have an accountant, I got somebody for you. Yeah. You don't have a lawyer, I got somebody for you. Oh, you don't have any insurance, I actually got a team behind me. You need this or that, right? To be that, as Ayal put it, quarterback for the client to make sure that their life is successful and protected.
Michael, thank you so much for your incredibly valuable time and your insight. It's been really terrific.
Thank you both. Really appreciate being here. Michael, you always ask too many questions, but that's fine. Some hundred questions, things that I don't know. But it's greatly appreciated. And that's part of our job.
Thanks so much for having me. I really appreciate it. Yeah.
I appreciate you helping us do our job better.
Yeah, making me blush.